it's about control. It's about the fact that the West controls the price, and these other countries understand that. And I think that building an exchange allows the price setting to move from a system that is massively rehypothecated and in essence fake to one that is more indicative of its real value, real price setting. So I think silver will go higher than people think possible. But just speaking mathematically, if you said $400, it would not be outlandish. Now, I'm not saying that's going to happen tomorrow, but certainly to see it north of 45 bucks an ounce is um, based upon 150, 200 years worth of price ratio between gold and silver, Western derived price ratio, that would just be reaching the average. So higher than people think possible. And once you get above 45, there is no resistance. So for the past 100 plus years, the average price ratio has been 42 to 1. So, let me pull up my calculator here.
Okay.
If you
I,
just took the price ratio of what do we got gold at today? Gold is at, so roughly 32.30 divided by 42, which is about the average price ratio of the last 150 years. That's $77. Keith Newmeyer, a buddy of mine, says that silver is coming out of the ground at 7 to 1. So take 32.30 and divide it by 7 and you get $461. Now, I'm not saying that's going to happen, but mathematically, geologically, if someone said silver would be $400 tomorrow, would it be that far off? Yeah, it sounds crazy. It does. That's short of the geologic ratio right now. So, there's man's ratio, there's God's ratio, you call it, which is the geologic ratio. The geologic ratio says it should be 460. The price ratio, because it's controlled on COMEX and on the LBMA, says differently. But I would argue that ultimately that's what this is about. With, like, for example, the BRICS talking about building their own metals exchange. It's not. It's about control. It's about the fact that the West controls the price, and these other countries understand that. And I think that building an exchange allows the price setting to move from a system that is massively rehypothecated and in essence fake to one that is more indicative of its real value, real price setting. So I think silver will go higher than people think possible. But just speaking mathematically, if you said $400, it would not be outlandish. Now, I'm not saying that's going to happen tomorrow, but certainly to see it north of 45 bucks an ounce is based upon 150, 200 years worth of price ratio between gold and silver, Western derived price ratio, that would just be reaching the average. So higher than people think possible. And once you get above 45, there is no resistance. So could it go much higher? Sure. I've never told people to buy gold and silver to become wealthy. It is wealth. It's outlived 2 world wars, German hyperinflation, the Great Depression, every pandemic. It's wealth. And the biggest money in the world is proving that, not only through accumulation, but maybe even more relevant is the repatriation. It's removing the counterparty risk that, right or wrong, the perception is it's not a good idea to leave it within the confines of the LBMA or the COMEX, and that's why you're seeing all of these countries choose to bring it home rather than allow it to be held by third parties. So these are all pieces of a bigger puzzle. I'm fond of the term logarithmic decay, which is little by little, then all at once. Well, it seems that the moves that are being made in accumulation and repatriation is the little by little, and it's continuing. With gold, the price is following along with it. You won't see silver go to the moon without gold following. It's just that silver perhaps is more important to the powers that be from a strategic standpoint. And because they have become very wealthy in peddling war and all of the tools of war, well, they've had to keep silver cheap. It's becoming harder to do that now. So I would expect silver to outperform people's expectations. When, I don't know, but logic and positioning and technicals all would say that it's probably closer than we've been to ever. I think gold will go higher than people think possible as well. But gold will be used, I think, to peg to a new system. You want to talk about once in a generation opportunity. Look, if I said show you how you can double your money with it only, or in essence, double the amount of gold you own with it only reaching its average price of the past 200 years, well, that's a pretty good deal. Just reaching the average price point of 200 years, which is 42 to 1. And in fact, it's over double. You take an ounce of gold and you trade it into silver right now, you're going to get, at 100 to 1 ratio, when you factor in premiums and everything, depending upon the silver, I don't know, you'll at least probably get 90 plus ounces of silver. Well, I mean, that's happened like 1/10 of 1% of the time in the last 200 years. It's a speck of dust. So you trade your gold into silver, you get 90 ounces. If all we did was reach its 200-year average of roughly 42 to 1, you over double your money. And so, look, I just simply think that there are very few times in life where all you have to do is get to the average price of the last century plus, almost 2 centuries, and it represents a over a 50% increase. I hate talking about buying silver to become wealthy, because that's never why I've done it, never why I've recommended it, but it's hard to ignore. And it's really due to the Western Central Bank and commercial bank suppression for years that has created this coiled spring. I don't know that there are very many assets that offer that type of setup where your downside is next to nothing and your upside is stratospheric. So yeah, I mean, I guess as much sincerity and objectivity as I can offer, I would say that silver to me is the investment of a generation. And easy for a gold salesman to say that. Honest to God, I mean it. And I don't know that there's a better place to put your money that gives you that kind of return, physical possession, which removes counterparty risk, and such low downside. So to me, it's certainly at the top of the list. Look, I've been conditioned for so long to expect the other shoe to fall that it is somewhat surprising to see how fast it has gone higher. But I think markets go higher to the upside than anyone really ever thinks possible. And if you take a step back and you are really being honest with yourself, ask yourself, why would the most powerful bank in the world in 2019 reclassify gold as the world's only other tier one reserve asset? And along those lines, why would the most well-funded and well-informed traders on the globe, the central banks, go on a repatriation and a buying spree since 2017 that the world has never seen before? Why would that continue unabated? And bring it closer to home, why would the United States become net importer since November of the world's only other tier one reserve asset? And when we see the countries around the world that are voraciously accumulating gold, there's talks of it being pegged to a new system, as we were told by Dilma Rousseff, the former president of Brazil and the head of the new development bank, that they've agreed in principle to a new settlement currency called the unit, which is 40% gold backed and redeemable upon demand. And everywhere we look, from accumulation to repatriation to reclassification to slow moving higher, or even Judy Shelton, who you interviewed, who has told me flat out Trump is going, by her belief, will issue gold-backed treasuries next July 2026, the 250th year anniversary. You put all of these puzzle pieces together in and of themselves, each one is significant, put them together, and it's almost impossible to not expect gold to go much higher. So yes, on one hand, as a guy who's been doing this since I was 19 for the last 35 years, I am surprised that it's moved in the manner that it has, as fast as it has. But when I take a step back and look at all of the pieces that are coming together quite eloquently, and outside the purview of the mainstream, mind you, which gives me more confidence that this is the right path, because the insiders never want to be too transparent about the direction that things are moving, yet they're positioning as if that is the direction that they're moving. To me, it becomes, well, yeah, that is pretty convincing that maybe indeed that is where we are heading. Quite frankly, if I were being completely honest, I would say that it's going to go higher than people think. You even got Goldman Sachs or UBS, one of the two, coming out and saying, yeah, you could actually see $4,500 gold by the end of this year if things get bad in the bond market with the basis trade or whatever it is that could trigger that, raising their low end projections to north of 3,500. I think perhaps we're going to see gold outperform people's expectations, mine included. It's abating a bit. but we're still seeing big deliveries. I mean, not quite as big as we were seeing in February, but even still, we're seeing it in the March contract. We saw big deliveries, 50 million ounces of silver delivered in the first day of the March contract. 70 million ounces of silver drained from the LBMA in January. That's an all-time record. We saw massive amounts in February. Still seeing it in March. It's happening, but part of the problem is that, Adam, is that the exchange in London is a T+1 exchange, and meaning T is the trade day, +1 is a settlement. You're supposed to have it moving on its way over here in 3 days. They're now saying, well, sorry about that, Mr. Taggart. We know that you have a bunch of silver and gold that you have purchased that you need for your manufacturing, and you're expecting delivery, but it's now T+8 weeks because we do not have enough trucks and manpower to move that, which is really nonsense. It amounts to a default. So part of the reason you're seeing it abate is because the LBMA has put the brakes on how fast they're sending it over here. But the trend of accumulation has not stopped. And one of the ways that you can see that is you see this massive increase right now in the premium in Shanghai, where silver is priced, I don't know, I think it's $7 or $8 higher than the London price right now. And gold is much higher, also trying to arbitrage all of that over. So you'll continue to see it happen, but it's as if the LBMA has gotten a little bit wise to it. Right now, silver in Shanghai is 7.2% higher in Shanghai than in London, and gold futures are only a 0.5% higher than they are in London. But this higher premium, this arbitrage, again, is trying to entice what is left on the shelves to be moved over, whether it be to Shanghai or whether it be to COMEX. The trend is to take physical possession, and it's not stopping.